Hi, this is Dan Ansell with Berkshire Hathaway. Today is Thursday, May 1st. Let's take you through the headlines and see what's happening nationally, then in California, and then locally here in the Santa Barbara Montecito markets. First headline, U.S. home market. Few buyers and not enough sellers. The consensus out there nationwide is the rise in prices over the past year and a half really hasn't been enough to coax sellers into selling. So there's still a shortage of inventory. To go along with that, though, there's sort of a shortage of buyers. There's been a run-up in prices and a run-up in interest rates there, so affordability has declined significantly. So not very many buyers out there either. So we're sort of in an equilibrium. Definitely inventory shortage compared to historical standards, but also affordability has been cut dramatically in the last few years between higher interest rates and higher home prices. So a lack of buyers out there to buy the few homes that are out there. Next headline, fixed mortgage rates tick up. For 30-year fixed, they're averaging right around 4.3%. Again, by historical standards, very, very low. But compared to a year ago where they're at 3.3%, they're up 30-something percent. So a big change percentage-wise. Still low, but not nearly as dirt cheap as they were a year ago. I don't think we'll ever see interest rates like that again. Existing home sales soft in March. They always break down these articles between existing sales and pending sales. We'll get to pending sales next. But in existing sales, they were softest in the west and in the south. Again, we don't have much inventory. They were stronger in the northeast and in the Midwest there, but essentially balanced out to about flat. But again, part of the country doing well. Part of the country, mostly the west out here, not doing as well because of a lack of inventory and a lack of affordability. Next headline, prices in most major U.S. cities flat in February. This is from the Case-Shiller index there, and what they're saying is of the 20 large metropolitan areas in the country there, prices are pretty flat from January to February there. I think in 5 of the cities they increased, but in 13 of them they declined slightly. So again, fairly neutral market, and it's been fairly neutral market for about the last 9 months. A little positive news. Pending home sales increase in March. Again, they've been fairly stagnant in terms of future activity for the last 9 months, but we saw a bump up in March compared to February of a little over 3% in pending sales, meaning it's looking a little rosier going forward. They're still down about 8% compared to March of last year, though. So again, better than they've been in the last 9 months, where it's been essentially flat there. But I think they were expecting pending sales to pick up because they've been saying that they've been slow because of the bad weather they've been having there. So there's probably some pent-up demand there, especially in some of the East Coast states there. Let's move to California. California foreclosure starts hover near 8-year low. So for the third consecutive quarter, the amount of foreclosures remained pretty much level in California, which means the worst is definitely past us. There's still some toxic properties that we're working through, but I think the foreclosure problem is a thing of the past, and now it's just a matter of getting it out of the system. So we're looking at about the same foreclosure rate as we were in 2006 before the mess even started there. So again, not too bad at all. The rise in prices has put equity back into a lot of properties that didn't formerly have it. Moving from California to the Southland, here's the headline. Southland home prices surge, but sales plummet. Not inconsistent with the national headline we're talking about, but they said that the median price reached $400,000 in the Southland, but the low end of the market there, would-be home buyers have been essentially priced out of it because of the rise in prices and the rise in interest rates. The lowest segment of the market is really, really not doing well. The highest end of the market is booming. They call it a sort of a market, 2 separate markets. There's the high-end market and then the rest of the market. It says, the market for high-end homes is hopping, with sales on the rise and buyers launching bidding wars. But sales of low to medium-priced homes have plummeted during the same period. with many potential buyers priced out. So again, two very different markets. The high end, there's a lot of money out there and it's finding its way into real estate. People's income hasn't kept up with the rise in interest rates or the rise in home prices there. Let's talk about Santa Barbara. How are we here? The number of sales, closed sales in April, 167, identical to April 2012, above April 2011, above April of 2010, 2009, 2008, 2007, even 2006. So pretty good for an April. Not quite as good as April last year where we had 200 sales, but again, that was pretty much the peak of the market there. Since then, it's been, I think the market, if you had to pick a month, I would say probably April or May of 2013 seemed to be about the peak, both in terms of activity and prices there. Inventory, 295 new listings coming on, nearly identical to last year where we had 294. Again, fairly consistent with this time of the year there. Let's move on to Montecito. 25 closed sales. That's exactly where we've been the last several years there, give or take, one property. There's been 24, 26, 26, so right in the sweet spot for an April. Pending sales, 32 pending. That's right where we've been also, very consistent with last year. 56 new listings coming on, very consistent with last year and the last couple of years, sort of fitting right into that sweet spot. So again, seem to have returned both in Santa Barbara and Montecito at a much more stable market if the April statistics are any indication. So that's where we're at for May 1st, 2014.